Welcome to the deep dive. So, you wanted to understand the nuts and bolts of decentralized social media.
Definitely. And Hive blockchain is a fascinating case study for that.
Right. We've got this research paper, Hive Blockchain Economic Sustainability Research, that we're going to unpack for you today.
Yeah, it's pretty dense, but super interesting. Hive basically popped up in March 2020. It was a hard fork from Steam.
Ah, the Steam fork. I remember that. Driven by the community, wasn't it?
Exactly. After Steam Inc. got bought by the Tron Foundation, the community really pushed for, greater decentralization. It says a lot about their priorities.
Yeah, absolutely. So, Hive is aiming to be this Web 3.0 platform, social media, gaming, DApps, the whole package.
That's the vision. Scalability, speed, and this is a big one. No transaction fees for the end user.
Okay, no fees is always appealing. How do they manage that? We'll get into that, I guess.
We will. It's key to their approach. So
Yeah.
our mission here is basically to dissect Hive's economic engine, look at the tokens, HIVE and HPD, and figure out, well, how sustainable does it all actually look?
Right. We want to pull out the really crucial insights for you. So, okay, let's start with the core economic model. Sounds like there are two main digital assets involved.
That's right, a dual token system.
Yeah.
You've got HIVE, which is their main cryptocurrency,
Right.
liquid, tradable,
Standard crypto stuff.
pretty much.
Yeah.
And you can stake it, which is important.
Uh-huh.
Then there's the Hive-backed dollar, HPD. That's their stablecoin.
An algorithmic stablecoin. Always an interesting beast. Pegged to the US dollar, theoretically.
Theoretically, yes.
Yeah.
Designed to stay close to a dollar using code, not actual dollar reserves.
Okay. And then there's Hive Power, HP. Is that just HIVE that's been locked up, essentially?
Precisely. You power up your HIVE, turn it into HP. It's like locking it into the network.
And what does that get you?
Influence, mainly. More voting weight on content rewards, more say in governance, like electing the witnesses who run the chain, voting on funding proposals. Plus, you earn inflation rewards just for holding HP.
So it shows you're invested, literally. And I saw something about powering down,
Well-
the opposite process.
Exactly. If you want your liquid HIVE back, you start a power down.
Yeah.
But it's gradual. It takes 13 weeks.
13 weeks. Wow.
Yeah, a portion unlocks each week. It definitely encourages long-term holding, discourages quick speculation.
Makes sense. And there's a waiting period for governance voting, too.
Right, 30 days. Any newly powered up HIV needs to sit for a month before you can use it to vote for witnesses or proposals. Adds another layer of stability.
Okay, interesting. Now, you mentioned no transaction fees, but then there's this thing called resource credits, RCs. How do they fit in? Are they like fees, but not called fees?
Sort of. Think of RCs as your allowance for using the network, instead of paying gas fees for every action.
Like posting, voting, transferring.
Exactly. Instead of paying for each one, you spend RCs. And how many RCs you have depends on how much Hive Power HP you've got staked.
Ah, so staking more HIV gives you more RCs.
Right. And the cool part is they regenerate automatically. About 20% of your total RCs recharge every 24 hours.
So if you have enough HP, you basically don't notice the cost.
For most regular activity, yeah. Even accounts with 0 HP get a tiny amount to start, and you can delegate HP to others.
Delegate. So I could lend someone my HP's RC generating power.
Helps onboard new users or support apps that need more resources. But importantly, delegating HP gives them RCs, not your governance vote.
Clever. Okay, so value on Hive seems to come from network effects. People using it, building dApps, creating content, proof of brain.
All of the above. Network effects, the utility of the dApps, games, social platforms, and definitely content creation, which they call proof of brain. That value is captured, essentially, through HIVE inflation.
Inflation again. So new HIVE is created.
And distributed as rewards to creators, curators, witnesses, HP holders, and the DHF, the Decentralized Hive Fund. HBD aims to provide the stable part within that system.
Right. Okay. Let's dig into those tokenomics. HIVE first. Inflationary. No fixed max supply. Why go that route?
It's deliberate, yeah. The inflation is the engine for the reward system. It needs to pay people to participate.
But it's controlled inflation, right? Not just printing money endlessly.
Oh, absolutely. It started higher after the fork, but it decreases automatically. Drops by 0.01% every 250,000 blocks.
Which is about, what, 0.5% a year reduction?
Roughly, yeah. And it keeps going down until it hits a floor of 0.95% annual inflation. That'll take about 20 years or so.
And how much HIV is out there now, roughly?
As of early 2024, circulating supply was somewhere around 475 to 500 million HIV.
So what makes people want HIV? What drives the demand side?
Several things. Staking for Hive power is a big one. You get the influence, the rewards, the RCs we talked about.
Right, the utility within the system.
Exactly. And governance participation requires HP. Then there's just basic trading on exchanges. And crucially, HIVE is the collateral, the backing for HBD.
Ah, okay. Which brings us to HBD. Designed to be a dollar peg, but algorithmic, not backed by actual dollars in a vault somewhere.
Correct. No direct dollar backing. It's created mainly when users convert HIVE into HBD, or potentially through DHF payouts.
And the supply just floats based on demand.
Pretty much demand and the overall debt level of the network. Late April 2025 figures showed around 34 million HBD in circulation.
So what makes people want HBD? Why hold that?
Stability is the main appeal. It's a reliable medium of exchange within Hive. Buying stuff, selling stuff.
Okay. Easier than pricing things in volatile HIVE.
Exactly. Content creators can also choose HBD for their rewards if they want stable payouts. And then there's the HBD savings interest, which we'll get to.
An incentive to hold it.
Definitely. And arbitrage opportunities. If HBD drops below $1, people can buy it cheap, convert it to $1 worth of HIVE, and pocket the difference. That buying pressure helps push it back to the peg.
So it's all about market mechanics and confidence in the algorithm, really.
That's the core idea. Flexibility, but relies on the market believing it works.
Okay, you mentioned staking HIV for HP earlier. Let's dig a bit deeper. Beyond RCs, what's the main pull?
Influence over rewards is huge. Your vote's weight, based on your HP, directly impacts how much HBD and HP an author gets.
Yeah.
And curators, too.
So bigger stake, bigger say in where the money flows?
Essentially, yes. Plus, HP holders get 15% of all the new HIVE created through inflation just for staking. Passive income, sort of.
And reminding us, powering up is instant, power down is 13 weeks.
Right. And delegation is key to supporting others, curation without creating.
Got it. Okay, back to HBD stability, algorithmic stablecoins. They can be fragile. What specific tools does Hive use to keep HBD near $1?
This is crucial. They have two main conversion mechanisms. First, HBD and HIVE. You can always convert one HBD into exactly $1 worth of HIVE.
Always. How do they know the price of HIV?
Good question. It takes 3.5 days to complete the conversion. And the price used isn't instant. It's the median price feed from witnesses over those 3.5 days.
Median price, so averaging out spikes.
Exactly. Prevents manipulation from short-term volatility. And if HBD is trading below $1 on exchanges.
People buy it cheap, use this conversion, make a profit. Arbitrage pushes the price back up.
Precisely. And there are no fees for this HBD to HIV conversion. It's designed to be the primary support when the price is low.
Okay, makes sense. What about if HBD goes above $1?
That's where the HIVE to HBB conversion comes in. You lock up HIVE, and you can get HBD worth 50% of that HIV's value.
Only 50%. Why?
Because of safety margin. Again, it takes 3.5 days using the median price feed. Any excess HIV collateral is returned. But there's a catch.
Always a catch.
Yeah. There's a 5% fee paid by burning HIVE for this direction. So it's really only attractive if HBD is trading significantly above $1.
So it creates more HBD supply to meet demand, pushing the price down. The fee discourages casual use.
You got it. Creates sell pressure when the price is high.
And the HBD savings interest, you mentioned that.
Right. Simple concept. Lock HBD in a savings contract. There's a 3-day wait to withdraw, and you earn interest.
How much interest?
It's variable, set by the witnesses. Currently, it's actually 20% APR.
20%. That's very high.
It is. It's been lower, like 10%, 15% in the past. But right now, it's a strong incentive to just hold HBD, which increases demand and helps support that $1 peg.
Where does that 20% come from?
Ultimately, it's funded by the HIVE inflation that goes to the witnesses, which adds another layer of complexity we can touch on later.
Okay. And there's one more mechanism, the haircut rule. Sounds ominous.
It's a safety brake, really, a debt ratio limit. It prevents the total value of HBD from getting too large compared to the total market cap of HIVE.
How large is too large?
The limit is 30%. If the virtual supply of HBD, excluding what the DHF holds, reaches 30% or more of the virtual HIV supply, the haircut rule kicks in.
And what happens then?
Two main things. The blockchain stops printing any new HBD. And the HBD to HIV conversion, the one that normally gives you $1 worth of HIV, that might give you slightly less.
So the peg could break below $1 in that scenario.
Temporarily, yes.
Yeah.
It prioritizes the overall health of the Hive economy over rigidly maintaining the peg during extreme stress. It prevents a death spiral where too much HBD debt drags down HIV.
Has this rule ever actually been activated?
Yes, it has, in the past during major market drops. So it's not just theoretical, it's a tested part of the system.
Okay, complex but comprehensive set of tools there. Let's shift to the reward system. Proof of brain. How does that actually pay out?
Okay, so remember the HIV inflation.
Yeah.
65% of all that newly created HIV goes into the reward pool.
65%, that's the majority.
It is. And that pool is split right down the middle. 50% for content creators, the authors.
And 50% for curators, the people voting.
Exactly. The amount a post earns depends on the total weighted votes it gets in the first 7 days. More HP voting means more potential rewards.
And rewards are paid in, HBD and HP.
Typically, yeah. A mix of the stablecoin and staked HIV.
So again, the more HP you have, the more you influence who gets rewarded. Who else gets a slice of the inflation pie?
Right. Besides creators and curators, 65%. HP stakeholders, just for holding HP, get 15%.
The staking reward.
Yep. Then the witnesses running the blockchain, they get 10%. And the decentralized Hive fund, the DHF, gets the final 10% for ecosystem projects.
Okay, that adds up to 100%. Now this proof of brain system, it sounds good in theory, but what are the common criticisms or challenges?
Well, fairness is a big one. Does it disproportionately reward those who already have a lot of HP? That's a constant debate.
The rich get richer problem.
Potentially, yeah. There are also concerns about things like auto-voting bots. Are they voting for quality or just gaming the system? And front-end algorithms might favor posts that are already trending.
Creating echo chambers or making it hard for new voices.
Could be. Vote buying or trading is another theoretical risk, undermining the merit aspect. And then there's the incentive alignment question.
Does it really incentivize quality or just reward-seeking behavior?
That's the crux of it. Like, curators get better rewards for voting early on posts that become popular. Does that encourage thoughtful reading or just quick guesses on what might trend?
Tricky balance.
Very. And the whole system depends on HIV inflation. As that inflation rate drops over the years.
The absolute amount of HIV rewards decreases.
Unless the price of HIV goes up significantly to compensate, yes.
Yeah.
Maintaining attractive rewards long-term is a challenge.
And finally, proof of brain is subjective, right?
Absolutely. It's the wisdom of the crowd, which can be amazing, but also prone to biases and groupthink. It's not an objective measure.
Okay, that makes sense. Let's talk adoption. How many people are actually using Hive? Is it growing?
Getting solid, consistent active user numbers is always tricky in crypto. But sources like at Archange on Hive track on-chain activity, which gives us trends.
What kind of numbers have we seen?
Well, back in late 2021, there were maybe 39D apps noted. Splinterlands, the big game on Hive, claimed over 7,500 daily players around then.
So gaming was a big driver.
Huge. And front ends like Ecency have tried to simplify onboarding, like with email signups, to lower the crypto barrier.
Are there efforts to keep people around retention?
Yeah, lots of community initiatives. Things like hashtag #IlputHivePowerUp Day, encouraging staking, active Discord servers, community building. But mainstream awareness is still low. The platform can feel complex for newbies, and data often shows lots of inactive accounts with very little HP.
Suggesting smaller users might not feel engaged or rewarded enough.
It's a possibility. It really seems like onboarding users through killer dApps is the most effective path right now.
So the dApps are crucial entry points. What about network activity, transactions, content? Is it busy?
Oh yeah, transaction volume is high. Very high, thanks to the 3-second blocks and those feeless RCs.
Like Splinterlands doing 600,000 transactions a day back in 2021.
Exactly. Shows the network can handle scale. But you have to ask, is high volume always meaningful activity?
Right. Are people just clicking in a game or creating, curating, discussing?
That's why tracking posts and comments is also important. Seeing the diversity of topics beyond just crypto chatter. You need both quantity and, perceived quality of content to keep people engaged. And the dApp ecosystem itself. You mentioned over 126 projects. What are the highlights? It's pretty diverse. Gaming is still big. Splinterlands, Holozizing, WOO, Actifit, which is like a fitness tracker. Social front ends like PeakD, Ecency, Hive blog are popular ways to interact. 3Speak for video.
NFTs too.
Yep. NFT showroom for art. And crucial infrastructure. Hive keychain wallet, Hive engine for creating custom tokens on a side chain via C network.
What does activity data show for these dApps?
It varies. Dapper often shows Actifit and Like2 on a social app with good unique active wallet numbers recently. Hive engine has significant volume. Splinterland's UAW on Dapper sometimes looks low, which might be a tracking issue, or maybe users interact differently now.
So different sources paint slightly different pictures.
Right. Reports like at Archange's tracking posts, comments, custom JSON data give another view. But the big takeaway is the success of flagships like Splinterlands historically shows how vital these dApps are.
And they're interdependent, right? Splinterland's asking the DHF for funding.
Exactly. And infrastructure like Hive engine enables so much else. The ecosystem needs both existing apps to thrive and new, engaging ones to keep emerging.
Okay, let's pivot to governance. Delegated proof of stake, DPoS. How does that work on Hive?
So users with high power, HP, vote for witnesses. Think of witnesses as the network operators.
Elected officials for the blockchain?
And kind of, yeah. The top 20 witnesses with the most HP votes get to produce blocks, validate transactions, basically run the show.
What else do they do?
They govern. They set network parameters like that HBD savings rate or account creation fees. They also approve software upgrades for the blockchain. Need 17 out of 20 to agree.
So it's meant to be efficient. Faster than, say, Bitcoin's proof of work.
That's the idea. Efficiency and scalability while still aiming for decentralization through the election process.
And decentralization was the whole point of the Hive fork, wasn't it? How does DPoS help there compared to Steem?
Well, the key step Hive took was removing that huge ninja mine stake held by Steem Inc. on the old chain.
Because that gave one entity too much control.
Exactly. Hive distributed ownership much more widely and put the power to elect witnesses in the hands of the broader community holding HP, aiming to prevent that kind of power concentration again.
Got it. And the decentralized Hive fund, the DHF, fits into governance too.
Absolutely. It's like Hive's built-in treasury. 10% of all new HIV inflation automatically goes into this fund at hive.fund.
And the community decides how to spend it.
Yes. Anyone can submit a proposal. I want to build this cool thing for Hive. I need X amount of HBD per day for Y months.
And then HP holders vote?
Yep. Stake-weight voting. A proposal gets funded only if it gets more HP support than the return proposal.
What's the return proposal?
It's basically a proposal currently run by Witness at GTG that just sends any funds it receives right back to the DHF. It acts as a baseline.
So other proposals have to beat that benchmark of do nothing.
Exactly. It's a threshold for demonstrating sufficient community support. And there are no downvotes, only varying levels of positive support. If a proposal passes, payouts happen automatically, often hourly.
That's pretty slick. Decentralized funding. How do people actually see and vote on these?
It's transparent. Front ends like PeakD, Ecency, the Hive.blog wallet, Hive Explorer, they all have sections to view proposals, read the details, see the votes, and cast your own vote with your HP.
Can you give examples of funded projects?
Sure. That Splinterlands proposal we mentioned, asking for 500K HBD over 6 months for marketing. That's a big one, focused on a specific app.
Okay.
And there are infrastructure ones, like funding global API nodes, essential background stuff, maybe getting 55 HBD a day, shows the range.
And the Splinterlands one sparked debate, right?
Well, yeah, big discussions, weighing their path contributions against concerns about management, the risk reward for Hive, the value of their users, whether it felt like a bailout, lots of community engagement there. Similar debates happened around a Leo Finance proposal too. Justification, costs, benefit to Hive overall.
So strengths and weaknesses of this governance model. What's the verdict?
Strengths. Definitely the DHF for decentralized funding. DPoS is potentially efficient. And the post-Steem changes really did boost decentralization.
Weaknesses.
DPoS always carries a risk of centralization,
Yeah.
either among top witnesses or large HP holders. Voter apathy is another risk. If people don't participate, bad proposals might pass.
And ensuring DHF money is well spent, measuring ROI.
That's tough in a decentralized system. Avoiding conflicts like the Splinterlands debate shows is also hard. That return proposal could even be used to suppress funding if large stakeholders coordinate. And then there's just general regulatory uncertainty around DAOs.
Right. Okay, let's talk risks. Economic risks. Price volatility is always there in crypto.
Always. HIVE price swings affect everything. Reward values, DHF buying power, witness operating costs. Implied volatility has often been pretty high for HIV.
And HBD. Even with all those mechanisms, the peg isn't guaranteed, is it?
No. Algorithmic stablecoins always have inherent risks. It depends on the conversion mechanics working, accurate price feeds, and ultimately confidence in HIV itself.
That 3.5-day delay for conversions could be risky in a flash crash.
It could, and the median price feed, while good, isn't foolproof. The haircut rule is the big backstop, but activating it means the peg is already under severe stress and might break temporarily.
Has HBD held its peg well recently?
Much better than in its early days, yes. but it has deviated historically, and some analyses suggest future dips below $1 aren't impossible.
And HIV and HBD are interconnected, right? HIV price crash hurts HBD.
Definitely. Low HIV price strains the collateral, potentially triggers the haircut, and a loss of confidence in HBD could cause people converting HBD to HIV, dumping HIV, crashing the price further.
A potential feedback loop.
Exactly. Even that high 20% HBD savings rate, it's paid by HIV inflation to witnesses. If HIVE's value tanks, is that rate sustainable? Probably not.
Okay, what about the decreasing HIV inflation rate long term? Is that a risk or a benefit?
It's both, really.
Yeah.
Lower inflation is good for HIVE's long-term value, less dilution. But that inflation funds the rewards.
So the challenge is getting enough organic demand for HIV and HBD from actual usage before the inflation rewards become negligible.
Precisely. If the reward value drops too low in real terms, participation might decline. It's a long-term balancing act.
User acquisition and retention. We touched on this. What are the big challenges and opportunities?
Challenges: low mainstream awareness, platform complexity for non-crypto natives, maybe perceptions about reward fairness for small users, and just tons of competition.
Opportunities.
Feeless RCs are a big plus. Proof of brain is appealing to creators. Data ownership, censorship resistance attracts a specific audience. The dApp ecosystem, especially games, is the hook. And the DHF can fund marketing.
But relying on dApps for onboarding makes Hive dependent on them.
Somewhat, yes. Hive needs those dApps to keep innovating and provide a smooth user experience, especially for first-timers.
And competition from Web2 giants and other Web3 platforms.
Yeah, Web2 has massive network effects, hard to beat directly. Web3 has Steam, Blurt, federated stuff like Mastodon, NFT platforms like Lens, newer ones like Bluesky, Farcaster, the whole SocialFi trend.
So where does Hive fit in? What's its niche?
Probably focusing on its strengths. True decentralization, censorship resistance, direct monetization via POB, the integrated HIV EHBD economy. It's specific to apps like gaming. It's likely more about serving that niche well than trying to be the next Facebook.
Makes sense. Lastly, regulatory hurdles. Always a cloud over crypto.
Yeah, huge uncertainty. How will HIV EHBD be classified? What about DeFi activity on Hive? Content moderation on decentralized platforms is another tricky legal area for front ends.
Does decentralization help Hive avoid regulation?
It offers some resilience, makes it harder for one entity to target. It also makes coordinated compliance across different countries really difficult. It's a significant external risk.
Okay, let's do some direct comparisons to understand Hives better. First, Hive versus Scheme, post-fork differences.
Fundamentally similar tech, right? DPoS, POB, dual tokens, RCS bandwidth, decreasing inflation. But key divergences.
Decentralization being number one.
Absolutely. Hive removed the ninja mind stake. Big difference in principle and practice. Governance also diverged. Hive created the DHF. Steam has its SPS, but different control.
Reward distribution, stablecoin performance.
Reward splits are actually similar now, 50-50 author-curator on both. HBD has generally held its peg better than SBD recently. And the big one is the community and ecosystem. Huge migration to Hive seeking decentralization.
What about staking rewards? Some claim Steam's APY is higher.
Seems misleading. Hive has the 15% HP inflation reward, plus that separate 20% HBD's savings APR currently. You have to look at the whole picture. The core difference remains Hive's focus on community ownership.
Okay. How about Hive versus other decentralized SocialFi platforms? Lens, Mastodon, Bluesky.
It's a varied field. Compared to Steam Blurt, Hive's arguably more active, more decentralized. Compared to Mastodon, Hive has the integrated crypto economy, which Mastodon lacks.
Lens focuses on NFTs.
Right. NFT identity social graph on Polygon. Hive is broader, older ecosystem. Bluesky and Farcaster are newer, still developing economics. Lines on Ethereum has rewards, but faces ETH scaling issues.
And SocialFi.
Hive has SocialFi elements, staking rewards, HBD interest, but it's not purely focused on finance like some platforms. Hive's differentiator is really that integrated L1 blockchain, the HIV EHBD model, POAB, DPoS, feeless transactions, and its existing dApp base. It's more of a complete package, but maybe more complex too.
You put together a comparison table. Can you walk us through the key points from that?
Sure. Hive, own DPoS chain, HIV EHBPA, EBD DHF model, covered by witnesses DHF votes. Differentiator, mature ecosystem, integrated rewards, feeless, decentralized ethos. Weakest, complexity, HPD peg risk, potential DPoS centralization. Steam, similar tech model. The centralization concerns post-acquisition are its major weakness. Lens, Polygon-based NFTs for identity. Differentiator, boardable identity. Weakness, less developed ecosystem beyond identity social graph. Mastodon, activity pub protocol. Differentiator, highly decentralized architecture, federated. Weakness, no native crypto integration rewards. Bluesky, AT protocol. Differentiator, still developing, focus on protocol. Weakness, early stage economics unclear. Mines, Ethereum-based. Differentiator, crypto rewards. Weakness, Ethereum scalability fees.
So they all have different trade-offs. Hives is this integrated but complex approach.
Exactly, it tries to do a lot on its own chain.
Okay, this has been incredibly thorough. Let's try to bring it all together. What's your overall assessment? Is Hive economically sustainable in the long run?
Synthesizing all this, Hive has real strengths. Functional DPoS, feeless RCs are user-friendly. POBI works as a reward mechanism. The Joule token system aims for stability. The deep app ecosystem is mature. The DHF allows community funding. And the commitment to decentralization is genuine.
But the weaknesses.
The economic complexity is high. HBD peg risk is always there. Reward system fairness and inflation dependency are concerns. DPoS centralization risk persists. Mainstream awareness is low. Competition is fierce. Regulation is uncertain.
So sustainable or not?
I'd say. Uncertain, but plausible. Its core strength is that integrated ecosystem rewarding participation. But
its viability hinges on some key things.
yeah, reward system needs organic HIV-EHBD demand to grow as inflation drops. HBD stability is absolutely critical. Lose confidence there, and it gets ugly fast. The DHF needs to be effective funding impactful projects, not just popular ones, avoiding drama. And they need continued DApp innovation and better user onboarding and retention. Simplify things.
So final thoughts. What are the absolute key factors to watch for Hive's future?
Well, Hive definitely carved out its niche as the community-driven alternative, especially post-Steam. That integrated economic model is its power, but also its complexity. Long-term success, I think, boils down to three main things.
Okay.
1, HBD stability. Can they reliably maintain that peg? Constant monitoring, maybe refinements needed. 2, DHF effectiveness. Is it allocating resources strategically for growth and innovation? Is governance transparent and accountable? 3, ecosystem value proposition. Are there compelling reasons to be on Hive besides just rewards? Vibrant dApps, easy onboarding, clear value in decentralization and ownership.
So lots of challenges: tokenomics, rewards, competition, regulation.
For sure. But the foundation is there, the tech, the community, the DHF. It has potential. It really depends on navigating those challenges through smart governance, innovation, and keeping that complex economic machine balanced.
Some truly insightful takeaways. It really makes you think. Considering Hive's unique approach to rewarding participation, how might decentralized platforms like this really reshape our whole understanding of online value creation, of digital ownership in the years ahead?
It's a big question.
Definitely gives you a lot to consider. We really encourage you to maybe explore Hive a bit more and the wider Web3 landscape. Thanks for taking this deep dive with us today.